The federal government appears one step closer to finding a solution to rising student loan rates. On Wednesday, the Senate approved a plan to lower those rates. Loan interest rates would be tied to 10-year Treasury notes. For undergraduates, those rates would start at just below 4%, about 5.5% for graduate students, and right under 6.5% for parents. These would be fixed amounts for the life of the loan. But here's the kicker: because the loans would be tied to the markets, the interest rates on loans taken out in years following could increase as the economy improves. To keep them from getting too high, lawmakers also developed a cap on all loans taken out in the years following: 8.25% for undergraduates, 9.5% for graduate students, and 10.5% for parents. Student loan rates nearly doubled on July 1st, with rates as high as 6%. Congress originally failed to find a solution to the rate structure that expired last summer, and at that point just extended the rates a year. The New York Times described the issue, saying, "In that sense, the trouble over student loans was like so many other disputes on Capitol Hill today, self-inflicted and prolonged." Now many Republicans say they believe they've reached a permanent fix, but other senators still have concerns. They say the new plan fails to address the $1 trillion in student loan debt that already exists and the growing cost of a college degree. They say it doesn't reduce the large sum of money the government is said to earn from these loans, and the system could lead to higher rates. But for many, the focus is still on the overall cost of college. This was a hot topic in President Obama's speeches this week.
If we don't invest in American education, then we're going to put our kids at a competitive disadvantage. If you think education's expensive, you should see how much ignorance is going to cost in the 21st century. It's going to be expensive.
And the editorial board at the Baltimore Sun seconds that point, calling on Congress to make a college education affordable for everyone because of the economic benefits. College graduates can expect to earn at least twice what students with only a high school diploma make over the course of their careers, and that greater earning potential translates into more disposable income to spur growth. It also means more tax revenue for the government to invest in infrastructure, education, and other public services. The Senate passed the legislation 81-18. It now heads to the House for approval. For Newsy, I'm Megan Murphy.